Hey everyone, Scott here. Now Domain just dropped a massive prediction and I'm telling you, this one's actually wild. If you've been thinking house prices are about to cool off or maybe even drop next year, you're gonna wanna hear this because the new Domain report could completely change how you see the market in 2026 and beyond. And look, the big banks like Westpac, ANZ and CommBank have been updating their forecasts too. But when Domain or realestate.com.au release new data, I always pay attention. Why? Because these guys can literally see the market in real time. They track how many people are actually searching for homes, checking interest rates, getting pre-approvals, every click, every listing, every buyer. So when they release a quarterly report, it's like a live pulse check on the entire property market. And what they have just said about Sydney, it's actually huge. Stay with me because I'll walk you through what they've found and what it means for buyers, sellers, and investors in 2026. So here's the big headline that you have to know. Sydney house prices have jumped again. The new Domain report shows the median house price in Sydney is now about 1.75 million. I'm talking about detached standalone houses. That's up 3.4% in just 3 months and up more than 6% over the past year. Think about that. In the last 12 months, Sydney prices have climbed by more than $100,000. That's roughly $2,000 a week. It was only 6 years ago that Sydney cracked the $1 million mark for the first time. Now we're talking about doubling that number. This is absolute madness. So what's driving all of this? Well, 3 big things. First, interest rates. The RBA has cut rates 3 times this year, February, May, and August, and that's lifted everyone's borrowing power. And of course, secondly, this has led to a massive boost in confidence. People feel better about the economy, real incomes are actually rising again, and consumer sentiment is higher than it's been in over 1 year. And third, supply. There just are not enough homes on the market. Listings are still way below average, and clearance rates are the highest we've seen since 2023. Now, as a property insider, you need to know that when prices are growing this quick, people tend to hold on to their homes and not list them. So this reduces the number of listings even more. So this is going to create a flywheel of growth in the next 3, 6, and 9 months. In addition to that, of course, guys, we know we don't have new supply. There's barely any options to go out and build and construct a brand new property. And that's typically what Aussies will do. If there's not enough listings on the existing market, they'll turn to actually building a property. There just aren't enough opportunities to build in Sydney as well. Now you need to add to that the government's new 5% deposit scheme. Now this scheme is meant to help first home buyers get into the market, but let's be honest, it's just added more demand to a market that's already short on supply. So what happens when more people can buy, we're not building enough homes? Of course, guys, prices keep going up. Now, yes, I've been talking about Sydney and focusing on Sydney, but it's not just Sydney. This is happening in every major capital city across the country. For example, Perth's median house price is now $981,000, less than 20 grand away from hitting the $1 million mark for the first time ever. Brisbane has now overtaken Melbourne and Canberra, sitting at around 1.1 million. Adelaide's jumped more than 10% in a year, and even the big regional markets are also on fire, up 11.5% over the last 12 months. So while everyone keeps waiting for a crash or a correction, the data keeps saying the opposite. Prices are still climbing. Now here's the kicker. Nearly every capital city is either at or very close to a $1 million median house price. That's a massive psychological barrier because once a city crosses that line, first-time buyers start to think, can I even afford to buy it all? And that's when affordability becomes a permanent problem. Let me tell you what's really happening on the ground right now. In places like Perth, you've got 20 to 40 people turning up to open homes. People are making cash offers above asking price just to have a chance to get into the market. It is absolute chaos. And it's not just Perth. This is happening everywhere. The truth is, we're just not building fast enough. Perth built about 13,500 homes in the last year, but demand was for around 17,000. And across the country, we're already 66,000 homes short in the first year of the National Housing Accord, which had a target of 240,000. And that 240,000 was meant to ease supply. In addition, the councils are not approving fast enough. Red tape is slowing everything down. And the cost of construction is still high. Materials, trades, everything is going up. This means projects are taking longer and fewer homes are being finished. Meanwhile, migration is still running hot and the government has no real plan to bring that down. So you've got more people, more demand, easier lending, and not enough homes. That's why the market is heating up again. Okay, so you've got the facts and the data, but what does this all mean for you? If you're a homeowner, your equity is growing again. You're creating more wealth and you're creating this wealth a lot faster than most people realize. If you're an investor, this is your moment. Rents are still high, vacancy rates are low, and more buyers are flooding in. If you're you're a first-time buyer, I totally get it. It actually feels impossible, but waiting on the sidelines isn't helping either. Every time prices move another 2 or 3%, that's months or even years more of savings just to keep up. And for those of you who are still saying, I'm waiting for the crash, well, Domain, Westpac, ANZ, Combank, AMP, they're all saying the same thing right now. Prices are rising, not falling. So what do you think? Will Sydney really hit a 2 million median house price by 2027? Or do you think the market's going to finally cool off next year? Drop a comment below. I genuinely want to hear your thoughts. And if you want to stay ahead of the market, if you want to understand what's really going on, instead of just reading the headlines, make sure you hit like, hit subscribe, and watch the daily property update. This is your 3 to 6 minute update every single day on the property market so that you can be a property insider.